So I think this is incredible setup for 2023 for startups to consolidate talent. So I'm actually excited to see us.
It's another data point that, again, I said it last week. I'll go out on a limb and predict my equivalent November fall predictions. Last fall, it was that the markets were going to poop the bed. My prediction now is that I think the markets are bottoming and consolidating.
Yep. 100%.
And this is the time, I think, to start nibbling and start getting ready to really rip the money in. And I think there's enough signals every day that kind of like tell me at least that on the margin, it's time, because I think the markets do a reasonably good job of digesting news and then pricing the forward reality, right? Like today's price is really everything we already know. It was true in, 2002, 3, and 4. You're talking incredible companies just in those two periods. Think about this. Atlassian, Tesla,
Uber, Google,
Airbnb, Uber, Instagram, WhatsApp, incredible businesses that have created tremendous value. And so there are businesses that have been invested in for the first time in 2022 and will be invested in for the first time in 2023 and 24, which will be the leading winners of this next phase and this next leg up. And so the real opportunity is to find out who those companies are and get behind them, I think.
100%. As I always tell people, fortunes are made in the down market. They're collected in the up market.
Hey guys, I'm Chris, and this video is going to be quite controversial because I've sold all my Tesla stock and I've put it all into what is essentially, for many people, a penny stock. But I put it all into the alternative protein space because I think, like Jamath just said, we're now in a market bottom, so now is a good time to buy future companies that you think are going to go somewhere. B, now's a great time for startups because a lot of talent is leaving and can be bought for cheap because of inflation. They now need to get a job. And so a lot of startups are going to be able to acquire really good talent to now grow over the next few years. And 3, I've owned Tesla for about 5-6 years now, and while I still think it is a great investment, don't take this as advice to sell and do the same thing I'm doing. This isn't financial advice. I'm just telling you my thinking here so you can get into this space if you're interested. But I like big bets. I could be wrong. I might lose everything. That's okay with me because I think it's really important to advance technology, and we've advanced now electric vehicle technology to the point where the best cars that are on the road are electric. So we've now checked that box. So now I want to get into the next thing, and that next thing for me is food technology, which essentially will enable us to transition a good part of the world to animal-free foods. So that's where I'm putting my money in now. And I think the industry is just starting. It's very early days. A lot of these companies are still seed companies. A lot of these companies are kind of even before Tesla was with the Roadster. So I'm taking a bit of a different investment angle, which I'll explain throughout this video. But yeah, I've sold all of my Tesla stock and I'm now putting it into alternative proteins because I think over the next 10 years, cue what was just said on the All In podcast, this is now the time to get into that next space. So for those of you who are investors in Tesla, don't take this as I don't think the company is going to continue to achieve great things, because I think it is. But I'm wanting to tackle the next thing because for me, we need to solve the climate change problem. Electric vehicles was part one of that. There's still a lot of work to do, but as an industry, it's now grown to a point where I can get out and move on to the next thing. So from an investment perspective, it's highly risky. Again, do your own research. Don't take this as me telling you what to do. I'm just telling you what I'm doing. I'm telling you my thinking. So now let's get into why I think the food opportunity is a really good opportunity. This article that was published back in September by Cult Food Science, they're one of the venture capital firms that I'm investing in. And they're talking about why we believe cellular agriculture is a generational opportunity. So this is specifically about them. If you're interested, go to their website. They have a lot of great information on their portfolio, on their team. They have a really good team that they put together. They have a great portfolio of companies. Again, it's a very small firm, but they have a great team, and they have a really great CEO who's been in the industry now for a while. He has some good interviews as well, which, again, I'll get to that in other videos. Another VC firm, so there's this one based in Canada, and they kind of cover North America, the US and Canada. And then there's this one based in the UK. And this one's essentially run by Jim Mellon. He's a big global investor. Cultivated Science also has investments in companies around Asia and Europe. Agronomics is just a larger firm. I'll get into more videos about different valuations and where I think each of these firms is going, and ultimately how things will play out. Because really, the reason you want to invest in these firms is because you want to invest in the underlying companies that these firms are investing in. All of these companies, it's so early days, all of these companies are private. And not only are they private, but a lot of them are, as I said, either seed or early stage companies. So just quickly, what does that actually mean? So we have the venture capital staircase. This is a good illustrative way of looking at how the funding model for VCs work. For example, I was investing on the public markets in Tesla, and they had already IPO'd. They had IPO'd a long time ago. And most people, when they buy companies, they buy them at the IPO stage, because most people like me do not have the money to invest in these earlier growth stages. And this is for angel investors, people with a lot of money, VC firms. And the way it works is you have these seed and early stage venture companies with a few employees. There's an initial product idea. You'll get between probably less than $1 million in the seed stage. And then once you get to the early stage, that's when you have a bit more of a solid product. And you'll grow your employees, you'll have some of your early prototypes, and you'll get between about $10 and $25 million in funding in that stage. And then, so these two stages is really kind of the proof of concept stage. Once you get to the next stage, this is when venture capital firms actually come in, and this is when your product is functional and it's proven, and you're starting to scale that up. Then you get to the growth stage, which is really where you actually start, everything's fully developed, you're really starting to scale up that. And at the end of that period, you are then going to IPO, or someone will buy you out. Usually that cycle is around 7 years. It's gotten a bit longer probably in the last number of years. It might go up to 12 years, but this is kind of what that funding cycle looks like. And then you IPO, and that's when the public markets get involved, and then you might still be growing. Just because you IPO doesn't mean you're not growing. It just means you've now gotten big enough above that 75 million, above 100 million, where you're now going to be needing a lot more capital. So this is where the food science, the cultivated food science, cellular agriculture industry is right now. It's still in the seed early stages. Specifically, cult food science investments are the seed and early stages. Agronomics, they invest a lot more in this venture stage. But the industry as a whole, there's a number of companies that are getting in the growth pre-IPO stages, but a lot of them are still in between the seed early venture stages. So we're still very early days, and I'm just super excited because as an industry, my thesis is that I'm starting with these early stage companies. I put the majority, actually I put all of my money into cult food science to start here, because I think nobody understands them on the public markets, and they're so undervalued because people don't understand what these venture capital stages are. So they don't understand that they're really getting in at the start. And yes, the risk is a lot higher, but if any of these companies are successful, that's a much bigger return. And then over time, so I have a target of about 1 million shares of Cult Food Science. And then over time, once I hit that target, I want to put the rest of the money into agronomics. And then as these companies start IPOing, so companies like Just, Perfect Day, there's a number of companies that I think are probably going to IPO in 2023, 2024. And so I'll start over time shifting more money into companies that I think are good investments at that time. But right now, I put all my money in the VC stage in these 2 VC companies. And that's my current strategy for the next year or so until the market grows a little bit further.
My prediction now is that I think the markets are bottoming and consolidating.
Yep, 100%.
And so just to show you why I've started with Cult Food Science, let's just take a look at Google here. There's 2 reasons. One, I spent the past 3 months since I really started looking into the food space. I've spent the past 3 months researching full time into this. So I know a lot of the companies, I know a lot of the investment angles, I know a lot of the technologies. I'm still learning, but I have a grasp of the industry enough to have conviction that this industry is going to be huge in 10 to 20 years. So as an all-time high, let's just say the market's gone down. I sold probably around here somewhere. So now the market's gone down. Actually, I probably sold more around here, but whatever. The market's gone down, and let's just say we go back to all-time highs. And ultimately, Tesla achieves full self-driving. Their Tesla bot comes out. So in 10, 20 years, when that part's running, their energy business is growing as well. Let's say they maybe they 10 times where they are at their all-time highs. That's impressive, but I only ever had 100 shares. And so let's look at where Cult Food Science was at their all-time highs. This graph doesn't give it to you, but their all-time high was 65 cents. So now we're back down to 4 cents, and we were at 65 cents as the all-time high. If I can buy 1 million shares and we just get back to the all-time high, not even factoring any other growth, let's just say that happens, that's already a really good return. Not only is that a good return, but I would think that the company would grow a bit more than that once people actually start learning about this industry. So that's why I've targeted around 1 million shares. Then I'll be putting money into agronomics and then so on and so forth. Okay, so that's kind of my investment thesis at a high level. I think that I will do very well in this space because the industry is going to take off. It can take 20 years, but my bull thesis for Tesla also involves it taking 20 years. And so I can get in now super cheap, and there's a lot of room for upside, even keeping in the current year trading bands, not even factoring in any additional growth. Okay, so now let's go into this article from Cult Food Science. Why I believe cellular agriculture is a generational opportunity. Cult Food Science is an innovative platform advancing the future of food. They have an exclusive focus on cultivated meat, cultured dairy, and cell-based foods. They're publicly traded in Canada under this ticker, United States, and Germany. So we provide, and this is the same as agronomics, we provide investors with unprecedented exposure to the most innovative startup, private, and early stage cellular agriculture companies in the world. Again, the key here is they focus on seed and early stage rounds. You don't get that with agronomics. With agronomics, you're buying into the venture to pre-IPO stage rounds. So we're trying to share the vision and thesis guiding our company. What is cellular agriculture? In its simplest form, cellular agriculture enables the growth and production of animal agricultural products directly from cell cultures instead of using livestock and resource-heavy farming practices. If you want a deep dive, they have a link. So how does this actually work? Well, we take tissue from an animal to extract their stem cells, and then those stem cells are cultivated in a nutrient-rich environment, mimicking in-animal tissue growth and producing muscle fibers inside a bioreactor. So if you think about how we brew beer, and we take yeast and we grow that yeast, we're doing the same thing. So instead of using a body as the vehicle for growing cells, we're using our bioreactor, our brewery, where we grow beer, to grow those meat cells. The biology is the same. Step 3, the muscle fibers are processed and mixed with additional fats and ingredients to assemble the finished meat product. So that comes down to a lot of the IP for how these companies work. A lot of what happens is you'll grow a set of cell lines which are the muscle tissue, and then you'll grow a set of cell lines which are the fat tissue, and after those reach a certain stage of growth, you'll combine them and use different techniques. You'll maybe grow them onto a scaffolding which will give them a shape, or you'll 3D print them, or there's other techniques as well, but that will enable you to create the feel and the texture and the shape of traditional meat as we know it today. So this is how the overall industry process works in a nutshell. The opportunity. We believe that the cellular agricultural revolution is a generational opportunity, both for affecting positive change in the world and for rewarding those who innovate and support the growth of this new industry. There's a great book by Jim Mellon, who is running agronomics, called Moore's Law, and that details a lot of the companies in the space, it details a lot of the science in the space, and it details why this is such a good investment as well. I'll put the link in the description. Highly recommend that book for anyone who's interested in learning more. So the flow of capital into cellular agriculture continues to accelerate, with notable investors including Bill Gates, Richard Branson, Ashton Kutcher, Leonardo DiCaprio, and even legacy participants like Tyson Foods and Archer Midland Daniels. Due to its cultural polarity, we believe that cellular agriculture is the single largest hidden in plain sight generational opportunity that is currently massively misunderstood and non-obvious.
It was true in 2002, 3, and 4. You're talking incredible companies just in those two periods. Think about this: Atlassian, Tesla,
Uber, Google,
Airbnb, Uber, Instagram, WhatsApp. Incredible businesses that have created tremendous value. And so there are businesses that have been invested in for the first time in 2022 and will be invested in for the first time in 2023 and 24, which will be the leading winners of this next phase and this next leg up. And so the real opportunity is to find out who those companies are and get behind them, I think.
100%. As I always tell people, fortunes are made in the down market. They're collected in the up market.
Here's just a look at the amount of money that has gone in to this space within the last number of years. This is a bit of an updated graph because we're in the later half of 2022. But you can see in 2021, massively more awareness coming into the space from an investment standpoint compared to other areas. So finally, the problem with the status quo. Traditional factory farming is cruel, inefficient, and enormously harmful to our environment. Legacy agricultural practices simply can no longer scale to meet the demands of an ever-growing global population. So when we think about the fact that the human population is going to grow to 10 billion people, and we're trying to scale our current food system to produce enough food for those people, we're already reaching the breaking point of that system with the number of people we have today. It's impossible to scale that further. It's like if you're in the technology industry and you're trying to scale your tech product beyond a certain number of users, maybe you get to a couple thousand users and it breaks. This is the same problem that we're facing with our food system. We have a scaling problem, and this is coming out in mostly environmental consequences. So the production of 1 kilogram of beef today using current technology requires 25 kilograms of feed, 1,451 liters of water, and approximately 3,500 square feet of land. Okay, if you take 1 kilogram of beef, I easily eat that much in a week. My family would eat that much in a week. So I would do your own numbers. Do your own numbers and see how much actual resources it requires just for you to eat your meals every week. And then extrapolate that by the number of people on the earth and assume that everyone should need the same kind of diet as you have. And then you'll see where our scaling challenges have come into play. Animal agriculture is responsible for 15% of all worldwide greenhouse gas emissions. And as we can see here in this slide here, this is actually larger than the transportation industry. So you'll have a lot more impact investment dollar-wise by putting your money into this emerging industry than you will by keeping it in a company like Tesla. So what I want to do through my investments is have impact. Of course, I want to make money, but if, for example, this fails and Tesla is successful, I am perfectly fine with that because I feel like I've already made my impact with Tesla. My dollars will go a lot further in making impact in this section. Animal agriculture accounts for 56% of water usage in the United States. So half of all the water used in the United States grows your beef and your chicken and your pork. By 2040, it is expected that meat consumption will grow by 50%, putting additional strain on resource land and the environment. So we have our scaling problem, right? This is a tremendous amount of resources. And we're trying to grow production by 50%. It's just not possible. So we need a safe, secure, and sustainable solution. There's a lot more great information on their team, on the strategy of how the company operates, of their portfolio companies. I'll get into that in another video, their intellectual property. I'll get into that in another video. I just wanted to outline what this opportunity is all about and why I've decided to sell my EV stocks and now go into this new opportunity. I hope that was helpful. Thanks for watching. My name's Chris, and I'll see you in the next video.